Hello, it's Thursday, the 29th of January, 2009. It's Brian Shannon from Alpha Trends here. We had basically a give up of yesterday's gains, and here in this market sure does keep things interesting. And anyone who really, keeps looking for this elusive bottom gets worn out each day, and it remains a trader's environment. Here, looking at the daily time frame, we are still above the 50-day moving average, which is down at 29.24, and we're right at that level that we've been watching so closely, that $29.60 level, 2 pennies below it. So we're basically right at it. But overall, this daily time frame with this, all these moving averages crossing back and forth just goes to confirm the overall indecisiveness of this market. And on the weekly time frame, we've been holding a higher low in here, but on diminished volume. So it remains a very tricky, volatile environment that you have to be trading based on short term. Otherwise, I would imagine you're just going crazy. This is that $29.60 level that we've been watching. You can see right now it's also the location of the rising 5-day moving average. It's going to be very important for the market to close above this level tomorrow if this market has any chance of adding to the upside from this week at all. It's still, again, guilty till proven innocent here on these daily time frames. The 30-minute time frame, let's take a look at the 10-minute actually. You can see we gapped lower, and we've got this pattern that we'd seen, a little higher high, but then it broke lower highs, lower lows in here, right down, filled that gap in. And yesterday I said not all gaps get filled, but this one obviously did. We're right at that rising 5-day moving average. We're at a very important level here. If we break in here, then I think there's a lot of people who are just gonna, we're gonna get the next round of give up sellers basically that are gonna be looking at this saying, the market just isn't capable of making a bottom, and we could see the real panic take hold. So you still have to be extremely careful. I think intraday, if we get a sell-off early, right down to 29.20, if it can bounce there and then somehow recapture, I wouldn't give it the benefit of the doubt, but if it gets down towards that 29.20 and starts to stabilize a little bit, maybe it recaptures VWAP, then it comes back up somehow back above 29.60, that could be a potential reason to get involved long. But right now we're going to have to at least take this level out here. You can see that this morning's lows, let's go down to a 1-minute time frame. This morning's lows, when they were broken, did act as resistance, and that was also coincident with the declining VWAP at that time. And I was in a couple blog posts and on Twitter, I was saying, there's no reason to be bullish, no reason to be looking to be a buyer in here. We've got a broken market. If we look at the 2-day VWAP, you can see that basically, this is the average price, this gold bar here, this gold moving average rather, right around 30. That's the average price since yesterday. So anyone who bought because of the Federal Reserve or because of this, bad bank plan, whatever, is now in a losing position. So if we look actually at volume weighted average price, and here's what we'll do is we'll take a look at take a look at it since January 1st here. So first day of trading was actually January 2nd. The average price this market has traded at, interestingly enough, and as I hadn't looked at this yet, is right here at about $29.55. So this is really even more of a pivotal area because basically this is the average price since the beginning of the year. We'll check that on the other markets as well. But you can't go too heavy except on your intraday trades, and there's some great opportunities, particularly when you're trading these leverage funds. I think that's really the best trading opportunity there is out there right now. Oil continues to remain broken and left for dead basically, and here it looks like. So no reason to really look at that for any potential trade scenarios that I can see. Russell 2000 back below that 50-day moving average on the daily time frame. We take a look. Let's look at that daily VWAP or the VWAP since the beginning of the year here on the daily time frame. You can see how it's moving as it recalculates that average. And the average price that the Russell 2000 IWM is traded at is $46.88. So $1.40 higher than where we are. And right now, when we look at the 30-minute time frame, this market pulled back a little bit further than that than the Qs. In fact, the Qs are really the only one that held above their important levels here. So not a lot of reason for hope. The 5-day moving average is rising, but that's not a reason to buy when we see this obvious pattern of lower highs and lower lows. We need to see, again, all these moving averages, Fibonacci, and that sort of thing are only just a tool to tell us these are inflection points that usually get a lot of people's attention, so we want to look for evidence that maybe the buyers are gaining control in this area. And right now, obviously, there's no evidence of that whatsoever. On this 1 minute time frame, we can see that the market tried to stabilize in here early on. Then it was lower highs and lower lows, closing well below the daily VWAP in here. On the 10-minute time frame, again, we're right right at this level. We're broken below this $46 level. So in order for any bullish scenario to potentially emerge here, it's going to have to at least recapture that 46 level. Right now, trading the Russell 2000, realistically, you've got no business looking for long side opportunities until it can at least recapture that 46, or unless you're looking at a 1 minute time frame and being very aggressive with your trades in here. Financials, we'd seen that those were up 12% yesterday. Well, today we saw them decline 8%, 7.5%. You can see that we did come down on lighter volume, and we did hold above that $9.40 level, which was last year's closing low and the recent resistance that we've seen in here. So we actually closed right down at daily S2, which was a level I pointed out on Twitter as well. But here's this $9.40 level. You can see that it's also basically coincident with that 5-day moving average. So not a reason to buy. This level isn't a reason to buy. It's a reason to look now that we have a rising 5-day moving average and this prior resistance and last year's low. It's a reason to look for evidence that there's buyers taking control. I think that would only come, from, let's say, a swing trader standpoint, if it's to get back above $9.90 or so. But same thing in here. We broke down quick. This yesterday afternoon's lows became the resistance. From there we saw lower highs and lower lows, and just a nice little collapse here at the end of the day. That was a very very tradable move. But this market, again, we're looking at this as an important level, not as a level to buy, but as a level where we expect a battle to be fought. This is the line in the sand. If the buyers can take control in here, well, then maybe we're not going to see a complete give up in new lows. But with the primary trend lower, there's not a lot of reason for hope, and hope doesn't pay the bills. Only disciplined trading does. So let's take a look at the volume-weighted average price on this market since the beginning of the year, and we're going to see that's actually kind of surprising to me that it's this low. So we've seen a lot of volume down here lately. But I was expecting the average price to be a lot higher than that because we had been up near 13 or so. $10.15 approximately. Let's take a look at that on the 30-minute time frame. We'll go right to the beginning right there, and you can see that average price changing. And right there, so at about $10.10, $10.15, and that's basically where we saw the resistance in here today. So sellers remain in control basically on all time frames. Nothing to be hopeful about except maybe there's going to be a bounce in there, and you can pick up a quick dollar or two with the FAS. But right now, no evidence of buyers. The S&P 500, it lost $2.84 or 3.2%. Yesterday, we'd seen it come up to that declining 50-day moving average. Today, we moved lower from there. We're also back below that level that we've been watching so closely at 86. Based on yesterday's big movement, I was kind of thinking that maybe we would have a little bit, at least hang up there for a couple days, but it was just complete, give up in here once again, back below that $86 level. If we're going to have any bullish scenario emerge from here, it's got to at least recapture that $86 level, and right now there's nothing suggesting that it will do that. But as we've seen with this incredible volatility, we always have to be prepared for anything. The market doesn't care what our opinions are, but we do see if we can keep it just keep looking at objective facts and price action. We saw, perfect stair step lower highs and lower lows. We're at the 5-day moving average again. It's not a reason to buy. It's a reason to look closer at the market action, look for evidence of buying. Right now, we're just not seeing any of that evidence.